Sorry, we are recording. Okay, it's on. So the lower layers, when I say lower layers, I mean the infrastructure layers, the communication layers, the actual servers that people host things on, and all these different networks that blockchains are actually hosted on in the first place. And you'll find in the self-study material some interesting content on the pillars, the 4 pillars of computing and what's needed for that. And a lot of the content then for this week is going to show examples, different examples of operations that are currently trying to solve these problems and make them more decentralized. So I hope you find this week's content really interesting. It was one of the more interesting weeks when I was putting it together, of the research that I was doing and stuff. And there's a lot going on. And I think the lower levels, these base ground levels, are going to be a trend at some stage, because we've seen DeFi, we've seen NFTs, we're seeing DAOs. We haven't seen the layers that actually really truly decentralize the whole lot. When I talk about decentralizing the whole lot, I kind of mean, like, last year we seen some of the decentralized exchanges going down because Amazon Web Services had an outage. So many blockchains, people are running nodes on hosted servers that are contained within these Amazon warehouses. And that doesn't really make them decentralized in the true sense. So the lower layers are kind of trying to solve all of this. So this evening, I am delighted to introduce you to a guy called Matt. And Matt is with a 3speak network. And the 3speak network started off as a video sharing platform that focused on censorship resistant content. But it's since developed wildly since then. A lot has been going on. And I would like to pass over to Matt to introduce himself, and let's have a bit of a chat.
Hey, thanks for the introduction, Paula. It's nice to speak to you again after such a long time. Hope you're doing well. I'm honoured to be invited as well. I really appreciate that you've put me in front of this room, and it's nice to meet you all. Hope you're all doing well. My understanding from Paula is that everyone's got at least a basic understanding of what Hive is and what Web3 is and decentralization, and this is kind of the interest in the room. So I'll pitch it at that level so that, you know, I'm assuming that you guys have got at least a reasonable level of understanding. It's taken me years and years to learn this stuff. So I'm going to try to explain it in as layman terms as possible, and hopefully you'll be able to absorb some of the information that I'll try and process it in a way that, you know, it's taken me 4 years to, I'll try and give it to you guys in 40 minutes kind of thing, and hopefully it sticks. But yeah, I mean, there's this whole Web3 thing that's going around at the moment, you know, and we've been working on the Web3 stuff for about 4 years now. We really are very old school in it, but we're trying to stick as much as possible to the true decentralized principles. So Paula just mentioned, you know, AWS, for example. Last year, I think it was Parler that they shut down, and we were just like, this is, you know, it's going to happen. You've got to get ready for this stuff. So we just removed AWS from everything that we were doing on our video site, and we tried to work out other more kind of small size and more distributed infrastructure systems to use. But we've been working towards this for about 2 years prior to that. So like Paula said, our main site is a site called 3speak.tv, and it's a video platform. So it's for video content. We store the majority of the content on our servers, but about a year ago, we started distributing that to IPFS, which is the Interplanetary File System, which is a distributed storage network, you should say. And then we moved our infrastructure away from AWS, and it's all about how do you get rid of the infrastructure. So we started this project on 3speak, the video thing, 3 years ago. And ever since then, we've always been looking, how do we get out, right? So we're not the central point of failure. And we originally built on Hive. So everyone on 3speak has a Hive account. And that's kind of the base layer. The base fundamental thing is Hive accounts cannot be taken away from their users, right? So we as the platform cannot take someone's account away, or their followers, or the money that they've made, or the community that they've built. That is on the base layer of Hive, and that base layer is truly decentralized, and that's the important thing. And it sounds like a bit of a gimmick, a bit cliche, like, oh, it's truly decentralized, but it really is. And so we're always looking for these criteria. How do you make sure that you can decentralize? How do you make sure that you can step away, and if you get arrested or taken out or disappear for whatever reason, the thing still operates, right? So, and this is a bit more difficult to do with video, because you can't store video directly on a blockchain. So we have to have like an off-chain sub-layer, which is where Paula was talking about the sub-foundations of this stuff. So what we've ended up building over time, and we got financed by the Hive DAO about 8 months ago, but we've been building the network for a while prior to that, and we've come around to this this vision of something that we call the Speak network, which is what 3speak operates on top of. And the Speak network allows us to run the infrastructure peer-to-peer. So the infrastructure, what is that on a video platform? That's encoding of videos, that's storage of videos, that's content delivery of videos, and then we have something called validation of storage as well. And then the idea is that we build nodes that allow any more or less normal person to run those nodes on behalf of the network. And so those nodes will then communicate peer-to-peer, and then the network rewards those users for running those nodes. And then what that does is that's what we've been doing with 3speak in a more centralized way. But now we have the Speak network that we're starting to integrate, and we can allow, effectively delegate those responsibilities to the community, and they can voluntarily run that infrastructure for us, and then they can be rewarded by the protocol. And what that does is it effectively makes us just one of the cogs in the machine, rather than the central pillar of the video content that's occurring on Hive. So am I pitching that at the right level? Is everyone following what I'm saying? Yeah.
Yeah.
Okay.
Anybody,
please let me know if you.
Yeah, if anybody wants to drop questions into the chat as we go, instead of waiting till the end, we can stop in between and we can ask questions. Yeah.
Cool. So shall I share screens? Is that?
Yeah, you should have possibility to share screens.
Okay. Class. There we go. So hopefully you can see the Speak Network logo.
Yeah.
So as we've built this out, we've realized the Speak Network is an incentivization layer for Web3. And that's really what. So we're hoping that at least the technology that we're building will be able to be applied to other places. And all of this is open source. So anyone can take this and copy it and build their own versions of it, or integrate themselves, So yeah, I'll go through a few of the main facets of this diagrammatically, so you don't have to picture it all in your own minds. Let's see how to change slides. That'd be good if I could work out how to change slides before I start the show. Okay. Okay, so I'm sure many of you got a good idea of the old internet, which is it's all venture funded. The venture funds don't necessarily have the interests of the end users at heart. They have profits at heart. So they will do what they need to do to make their profits. Then you've got, because it's centralized and it's on registered companies, and those companies obviously often trade as registered securities, they're regulated. So you have centralized regulation of free speech rather than community distributed regulated free speech. And then, of course, they run the infrastructure, so they can shut the storage down, they can shut your account down, they can shut your community down. And you really are at the whims of these centralized organizations, which is a great step forward in technology. But as we've seen, it's starting to be abused. Power corrupts, and absolute power corrupts absolutely. And so you've got to work out a way to distribute the governance and distribute the controls of these platforms and these ecosystems without the founders having control. Like, this is the thing that web, I call it Web 2.5 because everyone's calling it Web 3, but it really is Web 2.5 people are building, where they're doing a great job at building the tech out, but they end up giving themselves 10%, 20%, 60% in some cases of the token. And now you're regulatable because you directed the tokens. Once you touch the tokens, you're a security. And if you end up becoming popular and successful and influential, and people start saying things that the system doesn't like, then you're going to end up with the system coming down with securities law and trying to regulate you, which is what the majority of these protocols, these top 100 blockchains, will end up in the situation of, unless they fork away from their founders. So the Web3, it really is you run the infrastructure, or your community. You run your own economies, you store your own content, you host your own content, you run your own platforms. And the idea of Web3 really is to make all of this as easy and economical as possible for individual content creators and individual communities to do for themselves. And then that plugs into a wider network. And now it's completely separate to the old centralized web, you know. So that's kind of where Web3, and I would define, everyone's trying to define what Web3 is. I would define it very, very basically as Web3 is where you hold the keys and control your account outside of the influence of the platforms. And you can take that account with you wherever you go. And that account has its followers attached to it. It has its community attached to it, its economy attached to it, its content attached to it. And wherever you log into, whichever platforms have got this technology integrated, you take that with you. So the platforms can't remove any of that from you. They don't have the power to do any of that stuff. And so it really turns the platforms into skins, which allows the platforms to concentrate more on user experience. And it allows them to relinquish the management of accounts, relinquish the censorship, relinquish the running of infrastructure, so they can really reduce their costs. There's really a lot of benefits in these websites integrating Web3. And I like to think that over the next few years, as people start to learn that it's really about digital self-sovereignty, the users will start to demand that they have their own accounts separate to the platforms, and the platforms integrate these Web3 technologies. Yeah. Let's see if we can get to the next. Oh, too many slides there. That's better. So this will give you a quick idea of what the general vision for a Web3 ecosystem is. So the big grey box in the model, in the middle, is the protocol, and it's where the accounts sit. So the accounts will sit on a kind of base layer, and they are outside of the influence of the platforms. The platforms are built on top of the account layers then. And those account layers, when you post to one of the platforms, that same content goes to an indexer on the base layer, and the other platforms can also access the same content from the same account. And the same with the followers lists, the same with the economies, the same with the content, the same with the communities. All of that sits on the base layer, and it's stuff that doesn't change that often. So you can keep a nice lightweight base layer, and then you can put all the kind of complicated user experience, whether it's a video platform or a game or a blogging platform, that can all sit on the platform on layer 2, along with the smart contracts and things like that. So a lot of Web3 or Web 2.5 today is, such as Ethereum, for example, and Polygon, they're trying to do everything on layer 1, whereas, which is fine, but it struggles to scale then, because you're doing everything on the same layer, including the smart contracts. And what you want to do is have the kind of things that are real solid foundations that don't change often, like the account names, like the account management system, like the communities. Put that on layer 1, keep layer 1 as lightweight as possible, and then allow things like smart contracts that really have a lot of interaction with them and really affect the whole ecosystem every time one's interacted or one's changed. Put that stuff on a layer 2, and it just keeps the layer 2s nice and lightweight, and it allows you to continue to have, and this model that we're talking about allows you to have effectively free transactions. You don't need to have transaction fees. And so you can have all of these lightweight micro transactions going off. On the Speak network, we have Hive accounts, and we're also integrating, we're just in testing phase of ceramic accounts. And ceramic accounts aren't blockchain accounts, they're off-chain accounts. So it means we can free up the resources of the chain, because any transactions that happen on chain using, for example, Hive accounts, they take resources from the chain. So you don't necessarily want to put your LOL comments on the chain, right? Right now it's still cheap enough, but when these things scale, you want a place you can put your basic comments that you don't really want to store forever, because on the chains it's immutable. Off chain it's not immutable, but you can have people set up systems such as ceramic accounts where you can have accounts and content off chain, and so it's free to post. It's probably not as perfect a user experience. It certainly doesn't give you the monetization or the immutability that storing on chain does, but it allows you to function for the things that you need to do off chain that you don't necessarily need to keep all on chain. And then that allows the chain to scale even better. So that's kind of a similar model to what I see as a Web3 model going forwards. So with the Speak network itself as a Web3 incentivization layer, it's basically a protocol that lives on the same layer. It lives next door to Hive, for example. So it's like Hive, but it's on the same layer, but it's just not exactly the same as Hive. It's just another layer one. And it allows, so the problem with what Hive's doing is everything's on chain. So for example, it can't store videos on chain. It's just too dense. That data is too dense. A lot of the infrastructure required to run videos isn't built into the Hive ecosystem. Hive is basically a text storage system. And by the way, that's amazing in the blockchain world. There's virtually no chains that can do that efficiently, certainly for zero fees. So we really believe in Hive. Hive is also decentralized, and I'll go on to explain what real decentralization is as well. So it's incredibly difficult to regulate. It's outside the system. It truly is its own world, and that's why we run our free speech ecosystem on there, because we know we're going to be able to maintain the free speech of the users and make sure they can keep their accounts without them being regulated by centralized parties. So the Speak network sits next to Hive, and it is effectively the infrastructure that is required to run all of this Web3 capability. So I was mentioning before, any user can run an encoder. We've just built out our encoder layer. It's open source. Anyone can go copy that encoder and run it for themselves. We're just in final testing phase, and we've got about 20 people running encoders at the moment. And those encoders can be incentivized by people using those encoders. They can be paid basically, and it completely bypasses our encoder system now. So that takes us out of the picture as a video platform. Same thing with the CDNs. So people running storage nodes, for example, they're going to also run CDNs. And CDN is basically, when you talk about video, it's like if you're storing a video in Argentina and someone in China wants to play it, it's going to be a very low response. So you want the person in China, the CDN operator, to go, there's a video in Argentina and everyone in China is clicking on it. So I'll see that, and what I'll do is I'll download that video to my node locally in China, and then everyone can access that from my node rather than across the world in Argentina. And then for that, the community will pay some kind of incentivization for that person to run the CDN, and it just keeps the streaming user experience high quality. Then you've got validators and hosts. So the hosts store, and the validators will check. So what we've done is we've borrowed something called Arweave. I'm not sure if you're familiar with Arweave, but it's a permanent storage mechanism built on using Ethereum technology. It's amazing technology, but unfortunately for them, the economics behind the technology that was required at the time was like 6-7 years ago, and the technology just wasn't there to allow them to build their economy properly. So I think they gave themselves an 80% pre-mine, which is, it's a security. You can't give yourself any of the tokens. If you do that, you're going to get regulated. So when it comes down, I mean, it's great technology and it will work for all sorts of things. But for when we talk about free speech and content and being able to have community regulated speech, it's going to be difficult for them to get away with that because they've got so many of the tokens and they distributed them. So I could just see the SEC coming down on them in the same way they've come down on various other Web 2.5 protocols. But the technology is great and the guys are super smart. And so we researched them a lot, and we've built our own version of proof of access, which is their rewards algorithm, using effectively Hive delegated proof of stake system rather than a proof of stake or a proof of work, where validators get elected in. And those validators then ping different people who say that they're storing content. And if they ping them and they get the right hash back and they can prove that they're storing the content, then they get rewarded for the storage. And if they don't, if they say they're storing it and then they get pinged at random by the validators and then the return comes back that they aren't storing what they're saying they're storing, they lose their reputation. So this is something we haven't quite released this yet, but this is something that we're funded for and we're releasing in the next few months. So I hope you can all understand the idea behind this is to run the infrastructure peer-to-peer. Each one of these is a node that anyone can basically operate. And we're trying to make sure that most of it can be operated on your local PC with your spare drive space, or buying some kind of like $20 node, $20 server that you can basically run yourself. And we'll make sure there's plenty of support so that people who want to run these nodes can actually run them. And then that comes back to, we'll run our own nodes in this ecosystem as a video platform, and we're hoping that we can also talk to other platforms about running their own nodes as well, so that they can basically just keep doing what they're doing. They're already storing, they're already doing content delivery, they're already doing encoding, they already have content platforms, so they've got all the base infrastructure there. It's just, this will allow them to distribute the responsibility of that and take them out of the picture so that they're not centralized. And then in return for that, they will get governance tokens. They'll start to receive governance rights within the ecosystem, so they can then vote on different things that happen, which is effectively ownership of the ecosystem. So then the next thing that you can do here is, on top of this technology, you can build communities. So the base layers I was talking about before, they would also host the communities. And so you'll have one owner of the community who set that thing up, and then it will slowly but surely over time gain followers, and those followers are on the base layer as well. So no centralized platforms such as us can delete them, right, from 3speak. We can't, I heard so many stories about Facebook where they had 10 million followers, they'd spent 15 years building a community and then just gone because someone didn't agree with your politics or something. It's too much power for centralized organizations to have. So this really decentralizes that capability, and it guarantees that your followers will remain as part of your community on the base layer. As long as the base layer is decentralized, there is no central party that can take your work away. So this is the onus behind these breakaway communities. And if you imagine that protocols like the Speak Network will allow those communities to run their own infrastructure, from the content hosting to the content delivery to the encoding to the platforms to the index systems, and then on top of that they'll be able to distribute their own tokens, and there's various different governance models that you can use to distribute tokens. So what you're going to end up having is hopefully hundreds, maybe thousands of these communities, and it doesn't have to be the technology that we're building. We're certainly building everything open source for free and giving it away. So anyone can copy this if they don't like the way that we're running the Speak Network, for example. They can go just copy it and run their own. But the idea is that these communities will start popping up, and they'll gain followers, they'll run their own economies, and they'll be completely outside the system. As long as you distribute those tokens in a way that cannot be classed as a security, you are outside of the system's reaches. So it's going to be very, very difficult to regulate these systems, and they will act as their own sovereign individual communities online. You have to look, I mean, there's lots of ways you can do this, but you have to look at how you can make the tokens sustainable. You basically have faucets and sinks. So most tokens, especially airdrop tokens, they're just faucets and they distribute. The problem with continuous distribution is it's inflationary, and so they lose price over time. So you need something to tie the value of the community tokens to make the tokens have a demand, or to make them have a utility, so that people will hold them and push the price higher over time. And so one example, basically the principle is, it's like, as you accumulate tokens and use the community more over time, you'll accumulate more tokens, and then the more tokens that you accumulate, the more perks from the community that you'll get, and the more influence you'll get within the community, the more power you'll get, the more experiences that you'll be able to get. One example we're talking about here is, if you imagine like the way that a stock gives dividends to its most faithful long-term holders, effectively. So what you could have is, you could have a community generating NFTs with an image attached from, like, let's say that quarter or that month's activity in that community for whatever that community did. If some of those NFTs can be made very rare, so it's not like you're distributing thousands of NFTs, you might be distributing just 10 or 20 NFTs to the top token holders every month. So effectively, by mining tokens, by getting hold of tokens, by being active in these communities and receiving rewards in these tokens from the community, then you can lock in those tokens, and the more of those tokens you lock in, the more likely you are to mine some of these rare NFTs, and those NFTs may well be valuable in the future should that community do something of interest, that some moment in the community's history might be an important moment, and 5 years from now, 10 years from now, that might be worth having mined in the past because it's a rare moment and it's issued on the blockchain from the account of that community, so everyone can trace it back to the original issuer. This is a different mentality around just making artwork and distributing thousands of NFTs that may well end up being valueless. The idea here is that you're mining things of rarity by taking part in the community, and those things of rarity may well end up having value in the future. So you don't have to pay for them as such as a user. Another thing that we're building into the Speak network in the future is this idea of having a liquidity pool backing the community. So you can't really have an effective community without a sustainable token model and liquidity behind the tokens. And so you have to have this kind of liquidity pool sitting underneath either a group of communities or the whole network, or we can, maybe if some of these communities get big enough, we can get it to the point where they actually have DeFi pools for each community for their tokens. And then what we've done is, instead of just having a DeFi pool where you stake and you receive rewards from that based on trading fees or whatever other DeFi model you're using, some of the fees go back to the infrastructure providers to subsidize some of the work they're doing. And the way that you would do that sustainably is, for example, on the base Speak network layer, you have to receive miner tokens. So it's similar, I think you guys spoke to Coinos recently. It's similar to that, where you have to stake a certain number of miner tokens in order to do mining efficiently. And then the more proportion of the network's tokens that you're staking, the more efficient you'll mine in comparison to the other miners. And so what you would need to do is you would pay the network to receive those miner tokens, and the payment would go into the DeFi pool, and then that would get locked in forever, effectively, because there's no one to take that out at that point. Once you've paid in to get your miner tokens, you receive your miner tokens out, and now your money's locked in the DeFi pool, and that's put to work to provide liquidity for the community. So it's this idea of how can you receive something from the protocol that you pay for into the protocol to create additional liquidity, and then that liquidity generates fees, and those fees go to pay the operators of the network. So these infrastructure providers, these peer-to-peer people such as you and I. So this is the mentality behind what we call a SIP, a service infrastructure pool, instead of just a straight DeFi pool, but it's a similar principle. Yeah, well, one of the other things we think is super important here, that it's been missed all over the decentralized community, and it's such a shame. I kind of, every time we've looked into a protocol, it just ends up being clearly centralized. This is what we like about Hive. Hive forked out its founders. It had a founder that attacked it. They had a big pre-mine. This is typical of what's going to happen. Big pre-mine, founder does an OTC deal, they get taken over, and then there's a hostile attack on the community. These are all weak points of these protocols, and nearly every single protocol, every single coin in the top 100 has this issue. They all have big pre-mines, and they have big people, big VCs that don't necessarily have the interests of the community behind them. They're there to make profits ultimately, and they'll do whatever deals they need to do. So we've just seen that with UST. UST crashed because there was obviously a big over-the-counter deal done there, where the founder had a lot of tokens under his control, was able to do an over-the-counter deal, and there was a lot of shorting going on in the market there. It's like, how did they manage to get hold of those tokens without pushing the price much higher? Because there was over-the-counter deals done, because there's these big pools of tokens, because there's all these ICOs and pre-seeds and pre-mines. So the beauty is, if you look at Bitcoin, Bitcoin was done perfectly. Bitcoin is decentralized in terms of its distribution, at least, because Satoshi, yeah, he has a lot of tokens, but he didn't give himself any tokens, right? He started mining competitively. He mined those tokens for himself. He just started early and didn't sell. So he has those tokens fair and square as everyone else. Like he and the Bitcoin people built the protocol for free, gave it away for free, and then distributed the tokens to the miners, not to themselves. If they happen to be one of the miners, then that's fair game, because they mined competitively with everyone else. And that means that Bitcoin can't be a security, because there's no company behind it, there's no VC behind it, there's no ICO behind it. There's just a protocol, and you can't sue a protocol, and you can't sue a community, right? So whereas nearly every single other coin has had these ICOs, and then it's like, well, how did you distribute the tokens? You had control over the tokens to distribute to. And once you start asking those questions, you realize as soon as you give yourself control over where the tokens go, you're a security. And if you start saying things that you shouldn't be saying, you will be regulated. So you look at Library as another example of this. Great technology, great team, but at the time they built their platform, the tokenomic technology wasn't there to get away with this. And so they gave themselves, I think it was a 40% pre-mine. Now they're being sued by the SEC. You know, And hopefully technology like Speak Network will be able to help them further decentralize their infrastructure, so that whether or not the SEC sues them will be kind of by the by, because the community will take over control of the infrastructure. That's hopefully where this ends up going with Web3. So yeah, when we did our distribution, what we did is we used Hive to distribute to, because Hive's been distributing for 6 years now. The token's very well distributed. And when I say very well distributed, there are whales, and there are whales that own, I think, something like 5% of the token is the biggest whale holder. But that whale has earned those tokens or bought those tokens over time. It's not like they gave themselves 5% to start off with. So those tokens are being earned, and as a result, it can't be classed as a security. And because it's been distributed for 6 years, we can confidently say that that community has a well-distributed token. So we airdropped our miner tokens to that community, which are these Larynx miner tokens, which you stake when you run infrastructure to get more efficient mining. And then by mining in the ecosystem, by running a content delivery node or a storage node or an encoder node, you receive some of the governance tokens from the protocol. And so that's a completely decentralized process there. So, and we gave ourselves 0 governance tokens. We're not doing this for any profit. We didn't make an ICO or anything like this. We're funded by the Hive DAO. The Hive DAO is voted on in a decentralized way. So our funding doesn't come from a VC, it comes from a vested community. The project that we're building is in the interests of, the project that we're building is having it succeed is in the interests of the community, because it helps Hive. And so we don't have any like centralized owner that tells us what to do or anything like that. We're just building for the community and giving it away for free. And then anyone can take part as a result and actually own governance. So that's the principles. And the basic thing is no founders, no company, no CEO, no community ICO, no pre-seed. If you can get those criteria right, you can get close to what is actually decentralized, and then you can have your actual own ecosystem outside of the system that is regulated for and by the community and run by the community. So yeah, so then you come to the principle of that these communities become their own digital nations, right? They literally exist as their own independent sovereign nations, and they can print their own money now that can't be taken off them or stopped. And so as a result, it's going to go through the Gandhi phase of, you know, first they hate you, then they ridicule you, then they join you, and then you win. We've seen this already on Hive, for example. Hive had to fork quickly, and it took the name Hive quickly without doing much background research. And there's another company, well, Hive isn't a company, but there's a company registered on the Canadian Stock Exchange called Hive Blockchain Technologies. And that is a registered security traded company on the stock exchange. And it's within 2 weeks of them realizing that the Hive community had taken that name, they issued a cease and desist order via their lawyers, but they couldn't find anyone to issue the order to, because there is no company, it's decentralized, you know. They could issue it to 50, 100, 1,000 of the top holders, and there's still going to be people there running the protocol. And so they realized that they just had to leave it and drop it, and it just kind of is what it is. And it's this new world mentality of Web3 is going to be your community, your brand is going to be backed by your human energy behind your token and how active your community is, how powerful your community is. And they're going to have to go through, these brands are going to have to go through the phase of, okay, we're going to fight them, we're going to hate them, we're going to ridicule them, and then we'll eventually realize we have to join them. So it's like the quicker you can join this stuff, the better for your brand, or the better for your community. I see it as you should use the old Web2 Twitters and Facebooks to use them as traffic funnels, to funnel traffic to your Web3 properties. Because on Web3, on true decentralized Web3, you really do own your accounts and your communities. And so if you imagine whatever value you got off Web2 that they gave to you, those crumbs that they gave to you, well, in the market caps of these community tokens, they're gonna have like 95% efficiency in terms of capturing the value, because all of that value goes back to the community. There is no middleman taking value from it. There's no stockholders. There's just the token holders within the community. And so I think that these communities will see how much value Web2 is extracting when we have true decentralized Web3 communities operating and running token economies. They'll have incredibly efficient market caps, in my opinion. And then you get to the point where, well, if these entities are decentralized, they're their own digital nations and they can print their own money, as long as they have clever sinks in the tokens to make the tokens sustainable, so not just distributing and inflating. And as long as they have sound economic policies that the community looks after and cares for, it's obviously in the interest of the community to do that, then you could get to a position where these communities can start either lobbying governments or printing their own money to fund community projects, and they can become very powerful and very influential. And I think that's where the world's moving towards these digital sovereign communities. So it's kind of exciting. As long as you do it on Web3, then you have the right foundation, as long as that Web3 foundation is decentralized. So just to give you a couple of contacts, and I'll run you through a couple of the sites we're building really quickly so you can get a couple of examples of what this looks like. So we're at 3speak online on Twitter. We have a blog called hive.blog at Speak Network, and we have at Speak Network chat. So we have our sort of short segments. We run a community token talk show, our podcast CTT, at 9:30 a.m. every Thursday PST time. And we have a Discord and Telegram channel, which we'll drop later. And I'll just show you a couple of these sites so you can get a feel for what they look like. Let me see if I can get onto the right thing here. So this is our site, speak.network. This will explain to you everything that we do. It explains to you how to set up a node, how to get hold of the tokens, kind of what it's got the light paper there and the kind of foundations and everything. There's an app as well. Yeah, you can go. There's basically a lot of the things that I've just outlined in this chat here are kind of on the website. As I said, recently we did our initial drop of our Larynx tokens to the Hive community. And so this is the first, I think we're on 56 nodes now operating. So these are 56 individuals on the Hive blockchain that have stepped in and started running their own nodes on the Speak network. And that helps support the tokenomics and the validations. This is a proof of stake protocol. The reason that we use proof of stake is because we're effectively creating a liquidity pool for trading, and the more you want to be influential in the protocol, the more you have to stake into the ecosystem, and that secures the network. But yeah, it's just, we're really cool and honored to have 56 people around the world that want to run these nodes and really believe in free speech and believe in making sure that we secure this for Web3. And these are the initial people that are starting to receive the initial distributions of Larynx. They'll start to receive in a few weeks the initial distributions of the Speak governance token. Yeah, and it's just, we're one of these nodes. This is our node here. Speak CC is us. Yeah, so we're just in the same way that Satoshi did. We're just one of the node run operators, and we'll mine tokens with everyone else. Unfortunately, it's just to have to build it for free and give it away, but this is too important to not do it. So yeah, so that's that. This is one of the communities. So this is our first model. A group called Starter DAO contacted us, and they wanted to work out how they could run. So we allow people to set these up for free. So people can they can go to our site, they can click a few buttons. You have to have very basic command prompt knowledge, and you'll be able to run your own. You basically have your own URL, you have your own server, which you can get from Privex really easily, and we give you instructions how to do that. And then you run a couple of command prompts in your command panel, and it will start this site with your logo, your details, your content on your own server, and it all connects to Web3, and it's free. We don't charge anyone. There's not like, oh, you have to pay $1,000 or whatever setup fee. That's it. And this is a full Web3 integrated platform. So this is like, so I can click into this piece of content that the user's written here, right? They can log in, they can sign up. There's content moderation on here. They've received crypto, $11.14. There's comments that you can show. So there's a full operation platform here that you don't, and this is the beauty of this technology, because it's all open source. You just take what other people have done, copy it, and then adjust it to whatever you want. So this is actually, there's a platform called xnc.com, which is an amazing Web3 platform, and the developers are world class. And we've basically copied what they've done with their help, and we've simplified it and customized it to each community. So instead of it being XNC, in this case, it's StarkIt DAO. And then if there's another community that comes along, they just input their community, input their logo, show it where their website is, point it to a server and run it, and it just starts up the website. And this to me this is the foundation of where these communities will live, you know. And then the other thing that we're doing here is we'll accumulate points. So as users use these platforms, they'll accumulate points over a series of months, and then we do the token drops to the people with the points. So that's a decentralized way of doing the token drops. We'll have some botting issues with that, so we've got a few things to iron out there, but we think that's a really clever way to do that, because if you can set up protocols that distribute the tokens to these communities in a way where they've kind of proven their value over a series of months as genuine users, and then the tokens get dropped to them in an autonomous way, what you can do is you can start effectively running websites, running platforms like this without even speaking to the content creator that you're targeting, for example, or the brand that you're targeting, for example. You run it, you distribute the tokens over a number of months, and then the content creator could join of their own volition, or the community manager might join of their own volition later, and then try to earn their own tokens on their own behalf. And what that does is really important, because what a lot of these other platforms will do, they'll start with the content creator at the core, and they'll drop them 1 million tokens, and they'll make them $1 million overnight. That's a security, and that will be regulated. And that, it's okay, it might make the content creator a lot of money in one day, but in terms of true power, in terms of true sovereign independence, it's not independent. What you have to do is you have to, if I was a content creator, and I really understood this, and I appreciate content creators aren't going to understand this for a while, what you want to do is you want to drop to your community and keep yourself out. Don't give yourself any tokens, and then go in, create content, and let your community vote for you to distribute tokens to you over time. So you earn your tokens. And because you're really popular in that community, you're going to earn a decent stake over time. The point is that you have to earn them on an equal playing field to everyone else, and then you're a decentralized community. Once you're a decentralized community, you're out, you're in your own world, and now that's incredibly powerful when you can distribute your own money. A lot of people won't catch on to that for a long time, and they will have to go through court cases and regulation and all sorts of things. But the people that do, we're speaking to lots of content creators at the moment. These start kicked out guys have got lots of ins. They actually create the live streaming for a lot of the pop artists, for example, in what do you call it, the metaverse, right? So they do all the worlds and stuff. So they're in contact with a lot of these people. So we're kind of like working with them. They're interested in this. We're trying to explain to them and teach them how they do a genuine distributed, decentralized distribution that they can't get caught out with. And then that's where the true power comes in this technology, you know. I'll just show you a couple more things, and then we'll leave it for questions, I guess. So this is hive.blog. This is the same community on hive.blog. So you can see this is the platform, and that's the community number 139307. This is hive.blog, and it shows the exact same content, but it's a completely separate platform. So each one of these accounts, start kicked out, this one, however you pronounce that, start kicked out there, you can see back on the platform, it's the same content, right? So if you post to here, it also gets shared to hive.blog, which is a separate platform. So what that does is and then the same for Peak D. This is the same community on Peak D, which is a separate platform again. So the idea is all these platforms are built on these Web3 protocols. And when you post to one of them, the content goes onto the base layer, and then all the other platforms pull that content to their own front ends. So what that does is, like, one of the issues that we have is with content creators being censored. They go away and build their own platforms and then run on their own websites in their dark corner of the internet, and they get siloed because they never come up on the search terms. And over time, they end up losing content creators or not getting access to the network effect they used to have in the Web2 world that's controlled. Whereas when you do it like this, when you have an account layer that's distributed that can log into anywhere and post anywhere, and you have the content on an index layer that can post to anywhere. So when you post it to one platform, it posts to all the others. You have the potential for a network effect still. You know, so this is what the power is here, because you're going to have all these platforms tying into the same base layer. And as long as that base layer is growing, which is the responsibility the community to do for itself, then you can have you've got at least the potential for a network effect to happen. And on Hive, for example, you need resource credits. So you need Hive to get resource credits to post on chain. So as the network effect happens, it drives demand for the token, because you can't do as many actions on the network if you don't have many tokens. And that doesn't count really for individual content creators, because they've already got, you don't need many resources to post. But as a platform like what we're running on 3speak and Peak D and Hive.blog, they need to have the tokens because they need a lot of resources to run their platforms. And as their platforms grow, they'll need more tokens, and that drives demand for the token further as the network effects expands. This is our website. This is 3speak.tv. This runs on both the Hive blockchain and the Speak network. So each one of these is a video. You just click into the video. And you can see they've all got monetary rewards, which is basically crypto that's printed out of thin air and distributed to the content in the same way that Bitcoin is printed out of thin air and distributed to the miners. So in this case, on our platform, we print the crypto. We don't print it, the protocol does, and we send it to the blogs that have got the most likes and the most traffic and things like that. And then again, hopefully there's some comments here. Load. Oops. There we go. So there's a bunch of comments there. So you can get rewarded for your comments. Again, those comments are also shared on all the other sites. And then the video. And then this is our blog on hive.blog, but it's also on PeakD and 3Speak and everything. So it's at Speak Network, and we just put our updates out there for the Speak Network. And then this is our clips that we do. I was saying before, we do our community token chat every week, which is a live stream at 9:30 a.m. PST. And then we just put our clips on here. We kind of clip out the important bits and put it on here. And that's about it. So let me just go back to here. I think that, yeah, that's the last slide.
Wow. Wow. I wouldn't end it with that's about it. That was a huge amount. So
it is a lot of info, you know, but it's tough to explain it. I mean, we've been explaining it theoretically for so long now. Now we're actually getting to the place where we've actually got tangible products that people can use. You can actually show it in action, and people can start to see, oh, right, this is how this, because it's a new paradigm. It really is a new paradigm that's being built here, you know. And then with a new paradigm, it's a completely new way of thinking about the way content is regulated, the way it's managed, the way it's spread, everything like that.
So can I ask about the miner token, or the miners themselves? What hardware is needed for them?
Just
and
the basic.
If people wanted to start, because,
yeah.
And the reason for my question, so this question is coming just directly from myself, not anybody else. Most of us here miss the boat on affordable mining when it comes to Bitcoin. Ether is now moving over to a different system, and is quite heavily owned by VCs, as you kind of pointed out earlier on. So there's opportunities now for, as these lower levels are coming in, like Larynx, for people like us to be able to get involved in an early stage mining by offering up infrastructures. What do we need to get involved?
Yeah, so I'll come back to here. So this is our site. I'll put the links in the presentation so you can probably share it, but this is our Speak Monitor site. We didn't even build this. One of the members of the community built it, Hive Pizza, and Hive Trending built it for us, and it just ties into the chain. So each one of these people, a lot of them are relatively new to node operating, so they're probably quite similar to you. There's probably like 5 or 10 like really experienced guys, and then there's about 40 or so people who just want to run these nodes to start distributing the network. And the reason that they can run them is because the nodes cost them about $20 a month to run. And the price of those nodes shouldn't go up. One of the things that you do need to do is you need to stake Larynx, right? Okay. So that may be where some of the cost comes in. But the reason that we want Larynx and we want people to burn Larynx is, one, to put liquidity into the SIP liquidity pool by paying for the Larynx miner tokens. And secondly, it means the miners have to have stake in the network. You know, they can't just, they have to be serious people, and there's consequences to them messing around, because if you know, at the current moment, this is just for running the infrastructure for the token transactions, right? But as time goes on, we'll add the different types of nodes. So we've currently got people testing. We've got testers running encoder nodes. Next to come is content delivery. And then and that's probably in about 2 months or so. So people will be able to run their own content delivery nodes. And then about 2 months after that or so, we'll actually have the storage nodes and the storage reward system out. So people will be able to run their own storage nodes. But
will
at the moment,
be able to run them on their computers? And will they be, will you need to stake Larynx, or will you need to stake something else to set up them? What way will they work?
Yeah, so for the encoder nodes, currently there's no larynx staking required. So encoder, the way we've got our encoder node set up is, instead of it just being our personal encoder for 3speak, we're creating a 3speak cluster of about 20 people. And there's going to be some really powerful nodes in there and some not so powerful nodes. And we want that because in the 3speak cluster nodes, so that's specifically for encoding for jobs for 3speak.tv. This is going to be members of the community. It's going to be people with really powerful nodes. We'll make sure that the heavy duty videos go to those nodes. And then the people with the less powerful nodes will be available for like 3-minute videos or 4-minute videos, right? So we'll be able to, we're building a technology behind balancing that out at the moment. And then we'll also build an incentive layer in so that people can get paid directly from the users who are doing the encoding. Currently, the way we reward people for that is we receive Hive rewards for the content that we publish through our platform. We take a percentage of that and we give it to the encoder nodes. I think it's once per month we do that. But this is still early phase. It's not like you just set up a mining node and now you're going to make millions of dollars. These are the die-hard people that want this stuff to happen, and what they'll receive in return is not necessarily monetary rewards initially, but it's they will receive monetary rewards by the protocol, but they're not going to make loads of money like Bitcoin mining, for example, not right now. But what they'll receive is governance, and they'll be the ones that get to vote in the first validators. They'll be the ones that get to vote in the first settings in the protocol to decide what percentage goes over there, what percentage goes over there. You know, the different variables in the network. We want these people who have stepped up to do that, to be able to be the people that do this. And the great thing is with that is that we are then out of the process. We're just one of these people. And so that's a truly community-driven decision process, rather than us saying, well, we're going to keep control and we're going to get the network running and then eventually we'll give control back. So with the encoder nodes, you won't need larynx. With the content delivery nodes, you won't need larynx, at least initially. And with the storage nodes, you will, because the storage nodes will be rewarded directly with speak, and the same as the chain nodes that you can see in front of you. You need to stake larynx. So you can see here how much larynx has been staked. That's not that expensive. Let me see. 1, 2, 3. This is like $13 staked worth of larynx at the moment. Okay. Current prices. So it's, you know, like with $50 to $100 you can stake. And then the beauty behind staking is that on this protocol, you don't even need to run a node in the near future. In the next, say, 2 months to a month or so, you'll be able to get your own larynx, get hold of it on the DEX. I'll show you the DEX actually. Let's see if I can find that. There you go. So you'll be able to get your own larynx, and instead of running a node, you'll be able to power it up and delegate it to the existing node operators and receive rewards from that instead. So if you're a popular node operator, you can like lobby the community and you can get people to delegate to you instead of them running their own nodes, and that will give you some of the governance token instead of it all going just to the node operators. You're now going to get common members of the community receiving some of the governance node token just for delegating. At least initially, that's what at least to get the initial distribution of the governance token out. That's what we want to do. And then as time goes on, we'll when I say we, I mean we as the wider community, hopefully will run software in a decentralized way that will distribute more of the governance token to the infrastructure operators proper as the infrastructure nodes start up properly. But for now, we want to make sure that distribution's wide, so anyone delegating larynx to a node operator can receive some of the governance tokens in exchange for that. So we get a nice wide group of people that are voting in the protocol. Here we go. Okay, look, I thought this wasn't loading, but it's not that it's not loading. It's I can't see the login button there. There it is. So I can log in. Just put the password in. And this again, this is the layer 2 chain that I'm logging into. So this isn't the Hive base layer. This is me using my Hive account to log in to a new chain. So this is a speak network chain. It's on top of Hive, so it's a layer 2. But it doesn't have an account layer. We use a community layer or a followers layer. or a wallet layer, all of that is on Hive. All it does is just keeping track of the transactions. So it's a really lightweight layer 2. Whereas on Ethereum, their layer 2s do everything. So they're very heavy, and as a result, that ends up making them expensive. It ends up making them very difficult to fork. So this one, we can put updates out, no problem. The community just runs them because it's very minimal changes. You can keep changing and tweaking. Whereas if you're trying to do forks on things like layer 2s on Ethereum, which run everything, there's a lot to go through to get forks done, to get things changed. This is the beauty of doing it this way, with having the Hive as layer 1. So yeah, this is my Lanx balance, for example, on the Speak network chain. Yeah. So you go.
Excellent.
I'll come back to some more questions then. I guess I'll close the sharing down for now.
Yeah, you can close the sharing down, so you can. First question in there from Alex is, how big is the team?
Our team, we have 9 people in the team, and we have, like you can see there, 54 people running nodes at the moment. Our platform has something like 2,000 regular posters that are always posting content to the platform. And that's going to be one of many platforms built on the network. Yeah, so that's about it. We have 4 main developers. We're funded by the Hive DAO. Our funding last year was $140,000, and we're hoping to do one more round of that. So about a year from now, our own DAO is running the developers in the network.
That's excellent, and I love your open source mentality. And you're funded by a DAO, and that's how you're monetizing this. Which is, at the end of the day, blockchain projects need to be able to monetize. The people that are building them and developing them, they need to earn a living. And seeing this being done through a DAO is really pretty cool. So it is. Has anybody else?
We just think it removes the conflicts of interest. It completely removes conflicts of interest, because we don't have any venture capital to report to, where they might say, "Hey, we don't like the way you're doing this," or because venture capitalists are ultimately looking to dump on the community later. Right? It's just completely immoral. It's not the right way to do it. So hopefully, this way, I'm hoping that as we go forwards, and I'm not trying to be a trailblazer or anything, but we've just tried to do it in the most moral way possible. And hopefully more projects will see the benefits of this in the future and start doing the same thing. But at the moment, there's too much of a monetary incentive for people to take the token and put it in their own pockets and then make themselves rich overnight, and then say, well, we're using it to fund the project. Yeah, okay.
Yeah, I think, I understand you on that one, and I see people nodding their heads there as well on the videos, knowing exactly what you're talking about too. Has anybody else got any questions there for Matt? Everybody's very quiet.
Paula.
Yeah, how you doing?
Can you hear me, guys?
Yeah.
Awesome. So the question goes back to the miners and the technical requirements for the servers, or what is the mechanism to get involved? When you showed us the coin to purchase, where can I get that? I didn't really grasp that piece.
Sorry, I missed that. Let me share my screen briefly one more time. That's what I was trying to show you. I got sidetracked. So this screen that I logged into, which is the layer 2 token chain, I can go to the DEX here. And then this is where I can purchase the token from.
So you need to have Hive first, or do you?
Well, you can, yeah.
Is it Hive or HBD?
Yeah. So, and then you can see this is the order book on the other side. So these are the sell orders, these are the buy orders. So there's enough liquidity there for you to get some tokens and start mining for sure. As we build out these liquidity pools in the SIPs that we're talking about, we've got a whole wrapping thing going on with a project called Peer Plays, where we can wrap the tokens in about 4 to 6 months. We'll be able to wrap onto Ethereum, onto Polygon and onto, because obviously just having this on a small chain that we're not really shouting about much, there's not that much liquidity, but there's enough here for you to certainly get a hold of some tokens. And then in terms of the spec to run the nodes, off the top of my head, I can't tell you, but they're like $20 nodes. It's like you can go and get your own server for $20 and run. All those guys there, it's no more than $20 a month they're spending. So I can't give you the exact specs, but I can find out what they are. I've got them written down somewhere, but I don't have them off the top of my head.
Could you run it on your
That's
own
fine.
PC?
That would have been my next question, is if it's available, if you can send some instructions or some recommendations on where to do that, that will be helpful for us to research and figure out.
Yeah, sure. Let me do that now. So if I go to Speak Network website. So this was the content that was issued by the guy that built it. So he's done like a whole video here. Let's see how long that. See if we can find out how long that video is. So that's 46 minutes long, and then there's like a whole timestamps. So ordering a Privex server, that's at 1 minute 50, and he gives you like the different scripts you need to run on your server here. Let me see if there's a spec for that server anywhere. Let's go to 1 minute 50. See what's there.
Definitely, that's helpful. If you can share the link, that's great. But personally, I'm not that type of a guy, so it will be much easier, like for me to navigate through some of these steps. It's a little bit tricky, and the idea of like purchasing or running a node over the cloud by spending $20 a month or whatnot, it's feasible, it's reasonable. But again, where to go and how to get there, I think I'll need some help with it. Yeah,
sure. I'll make sure you get that link to this blog, which gives you all the instructions. This is basically the order. He's ordering the server now. VPS Hive. I can't see the specs just yet. Oh, here we go. So it's one of these. But yeah, I'll certainly get the link across to you, so you can have a look. And there's a whole community of guys in there that there's like a Discord room you can go in and ask questions as well. Yeah.
Just on that and renting servers, and back to the question I asked, can you run it on a PC? Do you need to rent a server? What's the benefit of having, it must be Linux based, is it, or?
I think it's both. It's Windows and Linux. You can do it for various different types of operating systems. I believe that you have to have a dedicated server to run the chain, right? We're building the storage node, so you'll be able to store locally on your computer.
Okay.
But you'll be competing against people who have got heavy duty storage systems, right, at the same time.
Okay.
So it means that you'll not be able to store as many videos as them, which means that when the ping comes to the video that you're storing, it's just going to be less often than the people who've got the bigger nodes, so they can store more videos. Because the more videos you store, the more you're going to get pinged, the more you can provide your proof, and then the more rewards you get. But we definitely want it so that people can run their own PCs and store it locally to their own PC. So I'm not going to show you now because we've got to set it up, but there's a desktop app. Because obviously we're running 3speak.tv, the website, right? So if we do get a takedown notice, for example, we will have to comply to that. Otherwise, we'll end up getting into legal trouble. But we've built an open source, again, all open source desktop app that you run locally on your desktop, a 3speak desktop app. And when you press play on that, that stores it automatically to your computer, to your IPFS node. It basically runs an IPFS node in the background on your computer. So when you press play, as that video is streaming to your screen, it's also going to your IPFS node and being pinned there, and that makes it available to the rest of the network. And that's one way that we try and we'll decentralize the storage. So as people play, those videos will propagate through the network and they'll get stored on more people's computers that way. But there's a difference between playing it and pinning it and storing it locally to your own IPFS node and storing it specifically on a drive that you connect as a miner. Those are two kind of different things. But it does mean that ultimately you will be able to use your own computer to take part in the storage. But it just means the rewards won't be that much, but you'll be able to get some rewards for it. And hopefully, as the economics, we don't know what the economics are going to balance out like, but we've built it in a free market way. So hopefully when it all balances out and it's running, you should be able to at least cover your costs and make a little bit of money. And the point of that is that because it's all peer-to-peer and all the infrastructure is incentivized by an autonomous protocol, we think that it's going to be the cheapest way to store videos, right? Because the protocol is going to incentivize people. You as, say, a platform that has, so why would you use this, right? If you're a platform or if you're a big content creator with a lot of content and you've run out of your own storage space, instead of going and getting your own server and paying a dev to set all that up for you, you just use the Speak network directly from the platform, and you can basically pay into it. And so what you're doing is you're paying into the community, and the community is going to store that stuff on your behalf, right? So because there's no middleman there, in theory, it should be cheaper than going to a service provider, a centralized storage service provider that have to take a profit out. Yeah, hopefully so. Because you're doing it peer-to-peer, it should be cheaper to do that. And then they get, the people running nodes in the ecosystem, they get rewarded by the protocol. So that's where they should make their profit, right? And as a bare minimum, they'll at least be getting governance rights in the ecosystem. So it's the people that are providing value to the network that will be able to govern the network. That's the principle to follow. There's like with a lot of these, like with proof of stake, for example, yeah, if you're staking, then you get to receive value from the network because you've staked. The more you stake, the more secure the network is, in theory. So that's one valuable attribute that you can do to the network. But that's not going to cover things like Web3. Web3's value is in the people providing the infrastructure and decentralizing the infrastructure. And there's all sorts of different types of infrastructure you need to incentivize to do that. And proof of stake just can't do that because all proof of stake can reward is people staking, which is great for monetary value, great for liquidity. But for things like running Web3 infrastructure, it's not. And that's why we need the Speak network, really, to distribute value to the infrastructure providers, to the people providing that value for the network, you know.
Excellent. Well, I have two more questions here I'm going to go through, and I am conscious of time. We have ran over a little bit, so I'll just put these two questions into you. Can a Raspberry Pi be used as a node, and if so, which type of node can it be?
I'm pretty sure that someone's running a Raspberry node for the layer 2 chain nodes, and that's why we want all the account systems, the followers, the content off chain or on Hive, so that the transactions that are on that layer 2 system that I just showed you, the Speak claim chain, it's as lightweight as possible. So it could be running a Raspberry Pi, but I'm not running one of those myself, so I don't want to get too far ahead of myself. I will double check on that and get back to you. But I'm pretty sure like it's as lightweight as it can get, so you can run this stuff on really lightweight things. If you're in competition with a big storage node with a really high fast ping rate, on the storage side, you probably won't be able to do that on a Raspberry Pi. But things like encoders or validators or running the main chain, those types of infrastructure providers, I'm pretty sure you could run those on Raspberry Pis because it's as light that is as lightweight as it can be. You know, it's only when you're in like hardcore competition. For example, when we ping in storage nodes, we want you to respond fairly quickly, because if you don't, then you could be like reading what's ahead, what's being asked for, getting the file yourself and stick it in the queue, and then gaming the system. So we want people to respond very quickly with that, because it just minimizes gaming of the system. So in that case, you'd have to have a relatively high spec node in terms of responding to storage requests. But on other parts of the network, it's very lightweight, and I can anticipate you can use Raspberry Pis to run that stuff. Yeah.
Excellent, fascinating, really. Don is asking, the video that you were sharing there a second ago, that went through the setup of the nodes, can you share a link there to that into the chat?
Yeah, sure. Yeah, I'll do that now, actually. Yeah.
Excellent. And would you mind me putting you on the spot there and asking you to share a link to your Discord channel as well? Because I know some people might like to hop in and ask some questions directly in the community, and that they'll get some more technical support.
I wanted, if there's a couple of seconds, I was talking to you just before the show there, Paula, and you were saying that there's people maybe in your group that are building similar technology or something along those lines.
No, that may be interested in using this. Yes, there is indeed, and I think I'll be making an introduction to you. So I do.
I'm really keen to see how we can collaborate. I'm big
Alex
for collaboration.
is waving there at you. It'll be...
That's me. I've sent you a LinkedIn request. I found you. It amazes me. I'm intrigued to find your journey from chartered mechanical engineer to doing what you're doing now as well. Yeah, I'd love to talk to you. Obviously now, I don't want to take away everyone else's time,
sure,
but
sure.
I see massive potential for leveraging what you guys are doing. We're not trying to do the same as you, but we could really benefit from what you're doing to help us run our Web3 solution. And I've been really intrigued about the whole way you've done things through the Hive grants, the approach to decentralization, because, that's what we've been looking at, and we need to fund the project. And we've been thinking, we just keep coming back to this kind of, if we want to fund it, how are we going to do it without centralizing it to then try and uncentralize it later? I'd love to have a conversation and sort of pick your brain on how you've achieved that, because we absolutely want to stick to that same kind of strategy of ethos. And we've been struggling to find the exact roadmap to get us there without kind of funding it through a traditional route, which we don't want to do.
It's so counterintuitive, and I think this is very beneficial for other people in the world, other people in the room, that aren't necessarily working on this stuff directly, but it's really interesting to know that sticking to the ethos, it's going to save you later, because if you can do everything in the way that Satoshi did it, it's just incredibly difficult to stop later. And we on our CTT show, and you're more than welcome. It'd be great to have you on as a guest one day, maybe, and we can have a chat, just shooting the shit on the podcast about what's going on in Web3 and the problems that are there. And it's like you see it every week. There's another solution coming out, another person working on Web3, and they're really great, but they always go for the ICO ethos. They always go for putting the money in their pocket, and it's gonna stunt them later, and they don't realize it until later. The other thing that may happen is if you go for the ICO ethos, I would be an advocate for the community forking the founders out. So we did this on Hive. We forked our founder out. We went to a new chain. We zeroed his balance on the new chain, and we moved that balance into a DAO. So now that money is the community's money. And what it means is that, okay, it's pretty hard for the founder, but the founder became hostile. The community didn't like the founder in the end. But it's going to happen to all these chains as they go up through the ranks and they become popular, become successful. They're going to get regulated. And that's a weak point in the ecosystem. And so the point of this technology is you can really use this technology if you follow it through, and you can really make your own independent systems that are outside of the influence of the current, let's call it, ever more oppressive system. And then in terms of the decentralized ethos, even if you guys were working on exactly the same things that we are, right? What I'd be interested in talking to you about is, what have you built that we haven't, and what have we built that you haven't? Can we just copy it and then save ourselves a bunch of engineering time, right? And because I don't have a vested stake in this, apart from what I'm earning myself as the rest of the community is, I'm not in this for profit, right? What I'm in this for is, can I accumulate the base tokens for myself on an equal playing field to everyone else? And then can I copy the open source technology and just make that technology better? So I don't have to start from zero every time. And every time I copy someone else's technology and build it into this and then add on to it a little bit to make it a bit better, that adds value to the base token, right?
Yeah.
And then you start to realize, well, instead of the profits all going to my account, then now the whole community is incentivized to continue to reiterate, as we distribute the token to the community, they are all part owners as we're all part owners. Yeah. And the more value they provide, the more value they're going to receive from the chain, and the more they're going to be incentivized to copy the current open source stuff, redo it or upgrade it, and then add more value to their base token, right? And it just becomes this reiterative process that kind of goes on its own journey that I mean, who knows where it's going to end up going. But I think that model for value generation, value return to value providers in these ecosystems is going to be so incredibly powerful and paradigm shifting, because people just, they're not thinking that way yet, but they will, because that's where it's all going, you know.
Absolutely.
So IP, the way I see it is like IP becomes valueless, and it's about governance and influence in these networks and contributing to these networks that becomes the valuable thing, you know.
Yeah, brilliant. No, I can't wait to have a chat.
I let you to have a side chat. I'll ping you on each other's email addresses, and I let the two of you have a side chat. I also think there might be another chat had with myself and Simon and Dee in terms of our own community, and is this something that we could utilize a little bit and maybe build on a little bit with the communities that we run in the space as well. Just a few other comments coming in there saying thank you, that it was excellent. Thank you for your time on this, Matt. Very interesting. Yeah, everybody seemed to have loved it and really appreciated it. So thank you very much, Matt, for joining us this evening. It's been a very interesting evening and educational evening for everybody. But on that, I am going to end it because it is 9:20, so I have kept you over. So I will see you all then next week. Thank you very much, and goodbye now.